2010 saw a spectacular rally in prices in commodities. Commodities like corn, cotton, coffee and rubber rallied more than 50%. Other commodities like soybeans, wheat, gold and palm oil made significant gains. Cotton was however the star performer with a 117% appreciation in price year on year. The gains were broad-based across diverse commodity classes, with soft and the agri sector leading the way. In 2011, we expect the rally to continue. The drivers and factors that drive commodity prices upwards are still intact. Demand is expected to increase with supply side issues remaining. There is still excess liquidity in major economies, and some of the funds would still be flowing into commodities in search for alpha. The top trade for commodities this year would likely come from the oilseeds and vegetable oil sector. This market is experiencing tight supply and facing a global production deficit, while consumption is expected to continue to rise. Weather is expected to be erratic in the production areas. This would affect the two main oilseeds, palm oil and soybean oil. We have had heavy rain in Malaysia and Indonesia, where most of the palm oil are grown. Climatic conditions in South America, especially Argentina, have been erratic for the last quarter with a severe drought. This has affected the soybean crop from which the bean oil is derived. There's also grain losses in Australia, where flooding is expected to disrupt grain supplies for weeks. The situation is similar in other agri sectors, and this sector is expected to outperform other commodities. The agri sector products such as corn, wheat and soybeans will continue to be affected by weather-related issues such as La Nina, while demand for these products will likely remain strong. The base metal sector also had a good year last year, with copper leading the way with a 33% increase year on year. We have seen strong demand from China and other BRIC states. Copper, in fact, had posted a yearly gain for the 8th time in 9 years. Again, in 2011, we expect higher copper prices. Most analysts are expecting a higher supply-demand deficit this year. The International Copper Study Group is expecting a deficit of about 500,000 tons compared with 56,000 tons in 2009. We expect a copper on LME to trade an average of $10,500 a ton in 2011. Additional demand is also expected to come from physically backed metals, the ETPs, especially for copper. In the soft commodity sector, we are bullish on coffee, where there had been an increase in world consumption and a stock decline. 2011-12 season would be a start of a 2-year low production cycle in top coffee producer Brazil. CUNAP, the Brazilian coffee forecasting agency, is pricing the next coffee crop at 41 to 44 million 60 kg bags.